Morning traders, and welcome to Price Action GPS. I'm the Market Surfer, here with your morning report for Wednesday, May 24th, 2023. We're going to go over T-bonds, debt ceiling, and the Treasury. And when we go over the charts, I'll do a good breakdown of the Bitcoin chart and how price action works and how I trade price action, because that chart is actually pretty good. Okay, good morning, everybody. Today's Wednesday the 24th, and at 12:40, Fed Governor Christopher Waller speaks, and at 2 p.m. minutes of the Fed's May FOMC meeting. Regardless of what they say, it may make good news for people to talk about, but the bottom line is the debt ceiling is taking over the news. So regardless of what anything happens, the debt ceiling is all that matters, to be honest with you. So our earnings lows was yesterday. Today we're looking at NVIDIA. There you go, that's a good one. And the others for today: Abercrombie, America's Car Mart. A lot of these should be interesting because of look at where the money is. American Eagle is consumer spending. Yes, Kohl's, Petco, and Health. Wolf. I kind of like Wolf as a long-term investment. That's not advice. It's just what I'm doing. So that looks pretty good. All right. Now the Treasury Department could issue $700 billion in T-bills within weeks of debt ceiling deal, draining liquidity from the markets. I won't necessarily read this whole thing and go over it, but real quick, the Treasury Department will issue $600 to $700 billion in T-bills weeks after lawmakers agree to lift the debt ceiling, Goldman Sachs estimated. So, with that, remember, they're going to issue $700 billion in T-bills. What is a T-bill? T-bills, they're all short term. So T-bills have the shortest term of all and are issued with maturity dates of 4, 8, 13, 26, and 52 weeks. So T-bills, all that liquidity they're talking about is for a short-term money. Well, I wouldn't call it helicopter money, but that's the liquidity that will be pumped in the market, will be all short-term. Now, I use the T-bill, where is it at? Or T-bonds, I always have on my charts. These are the longest. These are years. So I like them, and they do good at telling you, I guess, the forecast longer out. But I like it because it goes very well with the 2-year. They're inverse of each other. So the chart-wise, I like it. This is why I'm going to put this in the show notes to explain the difference between T-bonds, T-bills. This is a quick read. It's not too hard, and the benefits of it. But these are the things that are important when we're talking about the debt limit and things of that nature, because this is where the money they will allow them to do this, and you see where they're pumping the money. It's in the short-term liquidity. So I won't call it crisis or anything like that, but there are some problems in our economic system. And it's the system itself that's the actual problem. So now we'll go into the charts. And this is the T-bond futures. T-bills versus T-bonds. The T-bonds are the ones with the longest time for maturity, and they pay interest every 6 months. So chart-wise, I'm looking at the T-bond as it bottoming out. I'd say around 116. So from now to October, this could go straight down. Is that the volume may go up? Many people, I don't think there's actual volume on this. Yeah, they just give you a curve. So I'm expecting this to kind of barrel down to this area, the 116, 117. And that is the February 2011 low if we get down to 116. I'd say the market stopped it at 117, pushed it back up, and now the market will sell off there, right back down to 116, and then from there, I don't know how, but if this bounces and starts going back up, something has to trigger confidence in long-term markets if that's the case. And that could be a shift in political culture, could be a shift in monetary policy. Maybe austerity will start kicking in rather than just printing money. We'll have to see how that goes. Just my opinions about stuff. So here's the yen dollar. That's definitely topping out. So I would buy some yen, sell some dollars. Micro E-mini, it looks like we've topped out at that. That could be a nice sell-off, especially with the debt ceiling and contracts rolling over on the 14th. Here's the 2-year. Yeah, that looks like it's pretty topped out. I mean, we're still above the 30-period moving average, so we can still bounce off of that, but the RSI would indicate that the momentum has died. All right, so I'm going to go to Bitcoin, and we're going to break this chart down. So the way I trade is I find these little tails on these days of trading, and as see this right here, there was higher price, lower momentum. That was the time to sell. Now the time to buy is once it gets back to these areas. So first time, created enough buying frenzy. Second time, it actually held, and we went higher highs and higher lows. So that would mean the trend has changed to the upside. So I would say we're topping out at around 31,967, this area, but that's going to be a major sell-off because there's a lot of people that just want their money back when they bought up here. And that sell-off, let's see if it gains support. I'd say around the 20,000 mark, definitely above the 19. That right there was a beautiful bottom. So if I don't think we break that. If we do break that, we're going back down to 14. And once it gets to 14, it's kind of hard not to buy and try to ride it back up to 47. So that's the weekly. Now I'm going to go to the daily. It'll look a little easier to understand. So here's that bottom again. It held, that bottom held, and you see how I call it the watermark? It held above there, and there's your entries. There's your best price. There's your best entry. And then from there, look at it. And I would have sold there. I don't know why, and get back in right there. Yes, it's easy in hindsight, but if you continuously see this happen over and over, I won't say anticipate it, because then anticipation is more of an emotion, where you can have anticipation give you a guideline around this area. I'll break that down. We'll go to a 4-hour chart and look at the same spot. Right there, 600 period moving average, that bottom right there, that is a nice buy. It came out of there, and you got good price movement. You could put your stop there. You're in the money, and just let it go. I mean, right there, I probably would have got nervous and got out if I was trading that. And right here, we're gaining support, so this may be a good entry point again, just to take out that high. But look at that. It hit that price action and that trend line, and it held. It held for a while. This was nice, tight spring winding up, and then just let loose. So dollar index and that are roughly fighting each other, because if the dollar gets strong, Bitcoin should go down. If the dollar gets weak, Bitcoin should go up. Although I think the debt crisis and the political games that are going on may push people back into Bitcoin. So culturally and politically and economically, let's see what happens over the next 2 to 3 months over the summer. Because I mean, I wouldn't say the market's in turmoil. The financial banking system's in turmoil, which when people have money, they want to allocate it and put it in the safest places. I don't think anyone's looking for a return right now. They're looking for safety. And Normally, that would be the T-bills, the T-bonds, and all that government debt. But with the looming default, or quote default, they will not default. The looming issue of the debt ceiling will make people nervous because, the T-bills and T-bonds are what people get paid from the government. They buy that from the government and get paid from the government. So if the government defaults, that's less likely that people will buy them. But in all honesty, they will trim the budget before they default on debt. So therefore, I think it's, like I say, they lean left and go right. I think that's going to go through the roof. I think that's what's going to kill banks too, is all the shadow banking, and the Federal Reserve doesn't have much control over it. Well, I guess they do, because they're changing LIBOR to SOFR. See, the LIBOR rate is really, especially if you listen to Jeff Snyder, he really goes into talking about that is the euro dollar market, the LIBOR. So the LIBOR rate and your interest rates from that are basically a private banking entity and the interest rates. So the cost of money. Now, what does it cost to borrow money? That is going up because money, it's all supply and demand. There's a shortage of dollars out there, so the what is the money worth? And that is the interest rate. And then you have to see, as Peter Thiel would say, there's a cost associated with money and investing, and the best place for your money is where people park their money. So if they're not getting the return in the stock market and they are in other vehicles of investment, bonds, even junk bonds, but mainly money markets. But the money market funds are the ones buying up all the overnight repos. So they need that money there. That's why the interest rate is so high, because they need the money. Think of it as supply and demand and not economics. And this is what I mean. This is the weekly. I really expect us to get to the 116 on the T-bond futures. All right, everyone, with that being said, this is going to be a short day. There's not much to talk about with the debt ceiling looming and all that going on. It's just the charts, and they've reached places where I'm not interested in selling or buying right now. Some individual stocks, yeah, but the market in general, I'm just watching it so they can get to the places where I find value. Once again, everyone, thank you for tuning in. Thank you for your courage. Most of all, thank you for your support. Any way you choose to support this, lover of knowledge, thank you for your wonderful words once again. I love doing this stuff. So, lover of knowledge, this is always going to be up for you and other friends and family that are interested in this. So, it will always be here. If you are watching this on a modern podcast app, you could boost away, send us a boostagram. If you're not, you should probably go get one, because eventually that is the only free speech place there may be. So thanks again, everyone, for your support. Have a great day and stay safe and effective.